So what we have in here is a double top. You can see how that formed in there. Here you had these sell warnings right in here at this level. It gets slightly above it right over there, and then starts giving you this shooting star, big evening star right in there. I can't put all these warnings in there because all you'll have is pink ovals. But it's just really bad. And here is your rising VTL right in here. Here's your 78.6, which it got back down to, and look at where this low is right over here on this minor cycle. So the probability of this being a low is near zero. I usually make it like 10 to 15% because I want to be realistic. It could turn around and go straight up, but the probability of that is about 1 in 10. So it's much more likely it plays around in here and ends up going down and could actually really fall very hard in there. This break right in here got gold very stimulated after a big break. There was some capitulation selling in gold, and I'm going to show you that. Gold is better than the other three metals that we're going to look at, and this really helped the gold market rebound when that came. And again, you see that big downside move in there. That's because we're in print stage, pretty much. Actually, I have that wrong. It's the second bar in there that helped the gold market right here. Gold was falling along with it in that bar because there was a flight to cash going on in everything. So here you can see there's a shifted cycle in there. The normal low would have been, you see the low here and the low here? The normal low would have been right over here. But this cycle is either shifting or doubling up. I can't really tell. All I can tell from that is that it's negative because you see this support right over here? It's below that right there. So that would be a very negative signal in there. So I'm just going to duplicate that so you can see there's that cycle low right there. I'm lining it up, and there it breaks. So normally I say sell signal right there, but what I did instead was put in a configuration warning. For those of you, again, that are learning cycle analysis, that when you get that negative configuration, the probabilities of it failing in the sell zone, again, are well over 70%. So we project upward from this low towards the sell zone. The resistance is right here, 97.65 approximately, the bottom of this bigger zone at around 98. I honestly think it's going to have a hard time getting to 98 based on the patterns I see in here. So this is your 78.6% from the weekly. This is your breakdown level right over here. And there's some rally period in here. Of course, if this is the bottom right over here, then it will have doubled up, and that's where the cycle will come, and it will project up again. So when we get into these periods where they're so negative that you're getting shifts and doubling up on cycles and invisible cycles, all of those things are negative when they're moving down. And I want you to see here, see where the momentum was moving up all this time. Here's your negative signal on momentum. So you have the negative signal on momentum. That's a big change, and everything about this is negative. And if that's the case, you know, there's some serious situation out there. It's about interest rates. It's about printing money. It's about everything that could possibly hurt the dollar, and that hurt the dollar quite a long time ago when the dollar had a very major break. Let's see if I can get back far enough. No, I can't. That's because I'm on the daily chart. So let's go back. Let's go back here, and let's go back to the weekly chart just so that you could see. I don't even think I can get there because it was 10 years ago. Let's just make this monthly. I'm gonna do this because I want you to see it. So here is where here's where the crisis was in 2002. You can see that where the dot-com bubble came and Greenspan came in, and he shoved interest rates down to 1% and kept them there forever. That's where the activist feds really started back over here. And you could see what happened. The dollar was up at around 121, and it collapsed all the way here to 70. So right now, we're just now starting again in this phase where it's breaking down in here. I'm going to go back to the weekly, and we're in a very similar time period. See that VTL coming up? when that VTL breaks, and I think it's a high probability, we're going to have a dollar that is potentially in a collapse mode in here. So watch that very carefully in there, that VTL, which right now is trading at around 96.73 or something like that. So VTL, valid trend line, that is the trend line which will signal the double top having been confirmed, and the dollar in a lot of trouble. And if that's the case, then gold is going to do a lot better in that period. Remember, gold went from all the way to $1,900 from nowhere during that period where the dollar collapsed. So I'm planning a big picture analysis making that comparison somewhere here and sometime soon. So I wanted to see the really horrible condition in here potentially for the dollar. If that's the case, then the euro currency is going to be better. That's going to look a lot better. And you can see in here, we had signaled a potential bottom in the euro currency for sometime right in this period. Now it came, the upside reversal came 2 weeks after our projected low, right in here, which is really close. We also considered this the period of dollar risk, and that was spot on, because remember, we're looking at the euro patterns to show us where the euro was likely to have a rally, where the euro is likely to rally at 0.57% correlation. Inversely, that would be the period the dollar would weaken, and you can see how well that worked out. That's why we look at these correlations were so important. I don't know how you can be a trader in these markets without understanding these correlations and looking at multiple markets for information. So here you see the big move on the daily, and it moved up and past that 78.6% from the weekly pattern. You'll notice here what I want you to see on February 14th. So that was at this point right over here. Where were we? Right here. We said that in the next 5 to 10 sessions, the dollar is topping and the low would be due in the euro currency. So that was right here. It took 1, 2, 3, 4, about 4 sessions before it turned up. So you can see how that projection worked as we were looking at was a potential low or right over here in here, and this was perfect. So now you have this kind of engulfing pattern going on right now. What that points to is this cycle right over here making a top. If that's the case, the dollar is going to get a minor rebound. And in this period over here where the dollar could rebound, which takes you somewhere out into mid-March, that sets up a buy zone in the euro currency. So that's the best way probably to short the dollar, is to buy the euro, and we're going to be looking for that opportunity in here as the euro to us looks really good. It backed off from that resistance right over here, which is kind of the right spot at 112.20. So we're going to be looking to buy it somewhere over here at about 110.60 or down to about 110 approximately. So this is your buy zone right in here. If this moves up a little bit later in this area here and the dollar weakens a little more, then that's going to raise this buy zone up in here into the upper supports, which we will then change. So right now we're looking for that. That signals a little bit of a rebound in the dollar in a minor way, and then a good buying opportunity coming in the euro.